Hey guys, in this video I'll be sharing with you my weekly stock market analysis for the week of 4th to the 8th of March. Alright, so we'll take a look at the indexes first, followed by the stocks that I own. And then at the end of the video, I'll be sharing with you one macro picture that is potentially forming and might have huge implication for your trading or your investing, right? So that will be the flow of this video. So we'll begin with the S&P 500. So the S&P 500 has been very strong, as with all of the other indexes. So I think over here we actually 2 weeks ago the picture wasn't as bright as right now, because we had the CPI data, and then inflation came in hotter than expected, and then you see the market gapping down, right? And then like it rallied after that, but then it gapped down again. So in my previous video, if you have watched it, I actually was quite bearish about the short-term movement or the short-term price action for the S&P 500. So the reason being is that we had 2 gap downs in just a space of 1 to 1.5 weeks, right? So in terms of price action, that is quite bearish. So the long-term view, I'm still bullish about like the market, right? But then in terms of the short-term, because of this signs, right, and then we have been just moving up like all the way without any like major pause. So that was why at that point in time I was a bit bearish for the short-term price movement of the S&P 500 and the overall market, right? But then as always, when we are trading, we are not trying to predict the markets, right? We are trying to react according to what the market provides us, right? We are not trying to anticipate. So I was proven wrong, and then the market actually rebounded very strongly based on the block earnings from Nvidia, right? So Nvidia is one of the better performing stocks this year, and then everyone was expecting that Nvidia wouldn't be producing an upside surprise, but then Nvidia earnings just blew away most of the analysts' expectations, right? And that was why a lot of the stocks in the market also react to the Nvidia news. Right, so Nvidia gap up, and then the indexes also gap up on the news, right? And so far, the market has been moving very steadily upwards, right? So that's for the S&P 500. The next one is the Nasdaq, right? So Nasdaq, same thing. We had 2 gap downs, right? Then it gap up on the Nvidia earnings, and then right now it's holding both its 10-day and 21-day moving average. So in terms of looking at trends, right, as long as the 10-day remains above the 21-day moving average and prices remain above those moving averages, then we say that the short-term to intermediate-term trend is upwards. The next one is the IWM. So if you guys have been watching my videos or have been following me on Twitter, you'll know that I primarily trade in like small to mid cap stocks, right? So so far this year, actually I haven't been participating in much of the gains that you see in the major indexes, right? So partly because most of the gains from the indexes come from those mega caps, right? So I do not trade in those mega cap stocks very often, so I miss out on a lot of the mega cap moves, right? And if you see the IWM has basically been trading sideways since the start of this year, right? So this was end of last year, and then it has been just trading sideways, right? So if you do trade like in small to mid cap stocks, and you are like a short to intermediate term trader, you know that during this period the small and mid cap stocks have not been performing as well as the large cap stocks, right? But as things turn out so far, we might be seeing a change in that, right? So the reason being is over here the IWM has been forming a very constructive base, right? So forming higher lows, and then over here it actually broke out on last Friday's session, right? So on top of just the price action from the IWM, individual stocks has also been setting up based on my watch list, right? So that's a positive news for my type of trading. So so far, if the IWM is taking part in the rally, then it means that at least there's more participation in stocks in this this rally, right? So it's also it makes the rally more sustainable if more stocks are participating and not just the large cap or the mega cap stocks, right? So that's for the indexes. Now let's take a look at some of the stocks that I currently own, right? So the first is VTYX, right? So I actually bought on this day over here, so last Wednesday. So you see the stock had a large move up and it moved sideways, and then I waited for earnings to get out of the way first before I traded. So actually here was a potential entry, right? But then like seeing that earnings was just 2 days away from this day over here, I decided to wait for earnings to clear out the way. So reason being is during earnings, like especially for small to mid cap stocks, even for large cap stocks, right? Like during earnings, the stock can gap up a lot or get down a lot, right? So when you're investing or trading, the main priority is always to manage your risk, which is why I tend to avoid getting into stock before their earnings, right? So that's for VTYX. Then I bought SMCI. So SMC, I missed out the move over here, right? So this was a huge move, and as I mentioned earlier in the video, I missed out this move, right? Because this was an error on my part, because I felt that SMCI was a bit of bigger cap stock, right? So in terms of its price movement, I thought it would definitely move up, right, during a rally, but I thought it would be slower than those small and mid cap stocks that I generally tend to trade, right? But as we know, you see, if we take our price range to SMCI actually move up triple digit, yeah. So from the breakout over here to the highs, it actually move up almost close to 200%, right? So I miss out on this 200% move. So that's something that I need to continue to revise and make sure that as much as possible, I don't miss out on this kind of moves, right? But there's always a learning point in the markets, right? So I managed to get back on this day over here, so last Friday, right? So it break out of this downtrend line, right? Then I bought over here. I think right now pre-market is gapping up. So if I'm not wrong, it's on news that SMCI is added to the S&P 500. Correct me if I'm wrong. So so far it's moving up. So we'll continue to manage the position. Then next one is APP, right? So APP gap up on strong earnings, right? So you can see earnings triple digit growth year over year. Then for sales has been increasing for 2 consecutive quarters, right? And then the technical picture also is setting up nicely, right? So we don't just want to look at the fundamentals, we want to see that the technicals also align with the fundamentals, right? So I bought it on last Friday, and then right now the stock is doing relatively well. Next one is PGA. So same thing. So if you guys notice a trend, you see this one, it gap out on earnings, strong volume. So you can see volume was one of the strongest in the past couple of months and even years, right? And then like it gap up and it broke above this base, right? So if you see the base actually formed in May 2022, so it's almost close to 2 years, and then it broke out on earnings, right? So I bought on last Friday, and then you can see that it moved sideways, then it waited for the 10-day moving average to catch up, so I bought the breakout. The next one is Hood. So this is Robinhood, right? So I missed out on this gap up over here, but then as always, if you miss the initial entry, right? If the stock is a very strong stock, there's always another chance to get into the stock. So I managed to get in the stock over here on this day, right? So it formed a high handle. So because it broke out above the base, right? So you can see the base goes back to about also March 2022. So it's almost 2 years. Gap up on earnings. Then it managed to hold above the breakout level, and then I bought it on this day over here, and then I took some profits, and then right now it's moving quite well, right? So I actually wanted to add on this day over here, but then seeing that the stock remains quite extended in terms of its price movement and also from the moving averages, so I decided not to scale in my position in the stock. But I still hold quite a substantial position in Hood, which is also another reason why I did not add my position in this stock. The next one is Coin. So Coin, I actually bought this day. So So for all you guys who are watching this video, if you do not have a crypto account or a crypto wallet, right, no worries, you can always still take part in the move in the crypto markets by trading in like crypto proxy stocks, right? So Coinbase is one of such example, right? So I actually traded Coinbase on this day over here, right? So you can see I've actually been paying close attention to coin for quite a while. So I'm not sure whether I posted it in one of my previous videos or on Twitter. I started paying attention to the overall crypto stocks on this week over here. So the week before, all the crypto stocks started to move, right? So it was setting up quite constructively, and then I put them on my watch list, and then on this day it triggered my breakout, right? So over here I bought it at around 170. So right now I already took some profits off, but I still have quite a substantial position. So reason being is because I'm generally quite bullish about the crypto markets right now. So Coinbase is one of the proxy stocks, and then Coinbase is also one of the major crypto exchanges in the US, right? So if the crypto markets do perform well in the coming weeks and months, then crypto exchanges such as Coinbase might potentially benefit from the increased participation in the crypto markets from users and traders. So that's one of the reasons why I only took a smaller than usual percentage off on when it hit my 3-hour profit target. I'm still holding quite a substantial position in coin. So the next one is DNMR. So I missed out the initial entry over on this day over here, but as I mentioned, if the stock has strong momentum, then there's always potential for further entry positions in like the later days, right? So I entered on this day over here, and then right now it's just drifting sideways, so drifting upwards, right? Sorry. So to me it doesn't look as strong as my other stocks, so I think I might just sell off my position in DMR if it hit my 3-hour profit target. It actually hit on last Friday, but I was too slow, and then in the end, like, it moved down, and then I'm still holding it. The next one is TBIO. So I actually bought on Friday also, but then I bought on the breakout of over here, but then it went to close back down, right? So it's still above my stop loss, but then if it continues to move sideways, I might actually cut my position off first, and then wait for it to reset up, and then and buy it back again. The next one is CXAI. So strong move up, right? They move sideways. I bought, if I'm not wrong, I bought it on Friday as well, and then it went up, but it there's a lot of supply, right? So sellers start to sell the stock, and then it closed back at around the breakout level. So I might pay closer attention to this stock, because it's not just this session, right? So you see on Thursday session, and then on this session over here, there's the long upper wick. So what this long upper wick indicates to me is that there's still quite a lot of supply over here, and then if there's a lot of overhead supply, then the supply might overwhelm demand, and then prices might fall from there, right? So I'm paying close attention to this stock, right? So these are some of the stocks that I own in my portfolio. So as I mentioned in the earlier part of the video, I want to share with you something interesting in terms of the macro picture, right? So I actually shared this on Twitter. So I mentioned that GLD is breaking out coupled with a strong move in BTC, possibly signaling that investors and traders are looking for inflation hedge, right? So GLD is gold, right? Then BTC is just Bitcoin. So whenever gold and Bitcoin move, because of the nature of like this asset, right? So when you think of inflation hedge in the equities markets and in the financial markets, usually you think of gold and Bitcoin, right? So when these two are moving strongly, right, it might potentially mean that investors are looking for an inflation hedge, right? So, and as we know that the financial markets tend to price in things like 3 to 6 months earlier. So this might potentially signal that inflation might continue to remain high for the coming weeks and months, right? So but as always, there's no one that can predict the future with 100% certainty. But I think this is something good to know, right? So let's take a look at the GLD chart. So GLD is the Spider Gold Trust. So you can see that actually on Friday it broke out of its base, right, on above average volume, and then you can see that this base, right, is actually goes back to 2020. So it's close to 4 years, 3.5 years, right? And then coupled with the strong move in BTC. So let's say we use the proxy, right? So this is the Bitcoin Trust. You can see that Bitcoin Trust has just been just moving upwards in a almost parabolic fashion, right? So the strong moves in BTC coupled with GLD might signal that inflation might continue to stay for a couple of weeks and couple of months moving forward. So I think that's something interesting to take note of the macro picture.